The funeral insurance lie that steals $50,000 from your retirement. 3 safer ways to protect your family. You've probably heard, you're locked in at this price for life. Sounds safe, but many final expense and burial policies use stepped or age-rated premiums that rise as you age, or they start low with a teaser and jump later. That's precisely when your income is tighter, your medical costs go up, and your margin disappears. Here's what most people don't know. 76% of life insurance policies sold to seniors at 65 never pay out a single claim. People lapse in their mid-70s and lose every dollar they paid. Their family still has to scramble. And that's the worst-case scenario we're trying to avoid. Now, here's the opportunity cost nobody talks about, and it's brutal. If you're paying $40 to $80 a month for decades on a policy that might never pay, you're handing the insurance company $12,000 to $19,200 in premiums. Meanwhile, that same $50 a month invested at 5% over 20 years grows to $19,500 sitting in your account, accessible to your kids in hours. But if the policy lapses, you got zero. Your family got zero. The insurance company kept it all. You want peace of mind. Don't leave a bill. Don't confuse your kids. Don't drain your retirement. You can get that without rolling the dice on a policy that quietly gets more expensive while you get older. We're going to expose how the premium lock actually breaks, show you exactly what to ask your carrier to put in writing, and then lay out 3 safer plans that do the job. A simple funeral fund in a high-yield savings account with a pod beneficiary, a low-cost level-term bridge if you're reasonably healthy, and a pre-need plan that locks funeral prices with itemized guarantees at the funeral home. The thing most people miss is control. With savings, you control the cash, and your family can access it fast. With true level term, you control the cost per dollar of coverage for a fixed period. Then you drop it when it's no longer needed. With a pre-need plan, you control the prices for services and merchandise you actually want. If the contract is guaranteed and itemized, which we'll verify. Each path avoids the gotchas, stepped premiums that rise, vague benefit schedules, and policies that reset or reduce payouts because of waiting periods or missed payments. Actually, let me back up and explain the real trap simply. Insurers price risk by age and health. If your premium steps with age, it's built to go up. If it's level, you still need to confirm in writing that it's guaranteed level for the life of the policy, and the benefit is level 2. Marketing lines can be slippery. Look for words like renewable, age-stepped, modal factors, policy expenses, or graded benefits. If you hear them, your cost or your payout can change. That's why I'm going to give you a 1-sentence script that forces a straight answer and gets you documentation. Before we get into solutions, here's the mission. By the end, you'll be able to do 3 things. 1, call your carrier and confirm whether your premium and benefit are truly guaranteed in writing. 2, set up a funeral fund that's liquid, principal safe, and accessible to your beneficiary without probate through a payable on death designation. Banks like Bank of America and others document how POD works and why it speeds access. 3, price and compare 2 alternatives that can lower your lifetime cost. A level term policy size to realistic local funeral costs, and an itemized pre-need plan that actually locks today's funeral prices where guarantees apply. Now, you might be thinking, what about health issues? Savings and pre-need still work. You can also compare guaranteed issue policies carefully, but check for graded benefits and waiting periods. What if markets drop? Your funeral fund is in a principal safe account. Term and pre-need aren't tied to market swings. What if you move states? A good pre-need contract has portability. Savings and term are already portable. We'll cover all of that with clear questions you can ask and checklists you can act on today. Here's the shortcut nobody teaches. You don't have to pick one tool for life. Use phases. While you're building the funeral fund, layer a small level term policy for 10 or 15 years to cover the full target immediately at a low cost. As your cash fund grows, you can reduce or drop the term. If you prefer price certainty on services, use a pre-need plan to lock itemized funeral home prices for the parts that matter to you, but keep some savings for non-guaranteed items like cash advances, flowers, or obituaries that contracts often don't lock. That phased approach gives you control and cost efficiency, and it avoids the single point of failure that trips families up. Let me show you the stakes with something concrete. The National Funeral Directors Association reports median funeral costs around $8,300 for a viewing and burial in recent years, and cremation with a funeral service around $6,280. Here's the thing most people miss. Cremation is now 63% of all funerals in 2025, and it costs $2,000 to $3,000 less than burial. That's your baseline for sizing your plan. Region matters. That's why in this video we'll have you call 2 local funeral homes and request the general price list. By law they provide it to nail your actual target. When you see the real number, you stop overbuying coverage and stop paying for fluff you don't want. You also prevent underfunding, which leads to last-minute credit card debt for your kids. The game changer nobody talks about is access. A pod beneficiary on your funeral fund means your loved one can walk into the bank with ID and a death certificate and get the funds without probate delays, according to mainstream sources like Investopedia and major banks' FAQs. That single setup step beats waiting weeks for an insurance claim to process, especially if the policy has a contestability review, a waiting period, or missing paperwork. I'll walk you through naming a beneficiary, adding a secondary, and avoiding the estate planning pitfalls that attorneys warn about, like accidentally disinheriting someone or misaligning your will with your pod designations. We'll keep it simple and safe. Now, I want to plant 2 open loops so you don't miss them. First, there's a specific question you'll ask your insurer that exposes any policy in under 2 minutes. We'll use it in a live call script, and you'll know instantly whether you're locked or on a rising staircase you can't afford. Second, there's a step agents hope you never learn that can shrink your lifetime cost by thousands. It's in Pillar 3 when we talk about locking prices at the source, and you'll see how to do it without signing up for vague packages that bury fees in fine print. Here's why your current approach may fail you. Most people either buy the first policy they're pitched over the phone, or they avoid planning and leave a mess. The first path often leads to stepped premiums, graded benefits, and policy lapses. The second path forces your family to scramble, overspend because they're grieving, and sometimes fight through probate for weeks while bills pile up. There's a better way. We'll map 3 solutions, what each does best, and exactly how to set them up in under an hour of total work. If you remember nothing else, remember this. Guarantees should be in writing, money for funerals should be simple to access, and your plan should fit your budget without creeping up until it breaks. We'll reinforce the $50,000 opportunity cost framing across the whole video, not as a scare tactic, but as a reminder that small premiums over long periods add up, and if they don't result in a payout, your family loses twice. You can avoid that. Once you nail the basics of cost and access, everything else clicks. We'll start with how the premium lock really breaks, including age banding and modal fees that quietly inflate your payment if you switch from annual to monthly. Then we'll hit the question that exposes any policy. From there, you'll get the first fix, your liquid funeral fund, and a quick regional cost reality check, so you don't guess. After that, we'll cover the term bridge for healthy viewers who want more coverage per dollar during the years they're most concerned about, followed by the direct price lock at the funeral home with pre-need contracts, what's guaranteed, what's not, and how to protect yourself. Don't do what I did the first time I reviewed one of these policies. I believed the guaranteed wording without checking the schedule, and I missed a graded benefit clause that reduced coverage in the first 2 years. A viewer wrote me later. Their parent passed 18 months into a policy, and the family got a refund of premiums plus a small amount not the full death benefit. That's the kind of fine print we'll highlight, so you're never surprised. Before we continue, you need to understand the human side. This isn't about beating an insurance company. It's about setting your kids up to make one phone call, access the funds, and follow your simple one-page wishes. They'll know the provider, the service type, and the budget. They won't have to argue. They won't have to guess. That's peace of mind. And it's worth far more than a glossy brochure. Here's what you'll be able to do by the end of this video, step by step. Confirm your policy's true premium and benefit guarantees with one phone call and get it in writing. Open a high-yield funeral fund and add a payable on death beneficiary so your family can access money fast. Call 2 local funeral homes, get the general price list, and set a realistic target number for your plan. If you're healthy enough, get 3 level term quotes that match your target and verify fixed pricing and payout in writing. If you want price certainty on services, request 2 pre-need itemized guarantees and compare portability, refunds, and non-guaranteed items. Build a simple safeguard stack, copies of documents, final wishes note, and who to call, stored in one place and shared with 2 people. And boom, once that's in place, you've protected your kids without draining your retirement. We'll keep the tone straightforward and the actions small so you can make progress today, not someday. Stick with me for the next section, because we're going to break down the hidden cost mechanics that cause premiums to rise when you least expect it, and I'll give you the exact phrases to spot on your paperwork that signal trouble. You're locked in at this price for life. Sounds safe, right? With many final expense and burial policies, that line cracks later, premiums step up with age, teaser rates jump, or terms reset after a few years. It hits right when budgets tighten and medical costs rise. Here's the brutal truth: 76% of these policies never pay out. People lapse in their mid-70s, lose every dollar, and their kids still scramble. Here's the fix. I'll expose how the lock really breaks, give you the one question that forces a clear answer in writing, and show 3 safer paths that protect your family without draining your retirement. The step agents hope you never learn is coming. Here's the roadmap, so you can choose the right tool for your situation. Pillar 1 is the simple, liquid plan, a separate high-yield savings account labeled funeral fund with a payable on death beneficiary. Why this works: no underwriting, no policy lapses, no waiting. Your beneficiary can access funds fast with a death certificate and ID, bypassing probate. You keep control, and you can change contributions anytime. It's principal safe and predictable. Pillar 2 is the smart, low-cost bridge, a level term policy size to your target funeral cost, plus a small buffer. If you're reasonably healthy, you get more coverage per dollar during the years you care about most. The keys are fixed pricing and fixed payout for the entire term, confirmed in writing. It's designed to do a job for 10 to 20 years. Then you drop it once your savings are sufficient. Pillar 3 is the direct, guaranteed price lock, an itemized pre-need plan with a funeral home that guarantees today's prices on specific services and merchandise. Done right, it locks the costs you actually want, and it should spell out what's guaranteed, what's not, portability rules if you move, and refund provisions. Quick compare. Cost control. Savings is flexible. Term is efficient for temporary needs. Pre-need locks service prices at the source. Flexibility. Savings wins. Term ends. Pre-need depends on contract details. Health requirements. Savings and pre-need don't rely on strict underwriting. Term often does. Peace of mind. All 3, if set up right, reduce stress and confusion for your family. Payoff preview. Small actions today reduce family stress tomorrow. We'll keep reinforcing the $50,000 opportunity cost you avoid by not pouring money into rising premiums that may never pay out. But first, you need to understand the trap. The trap, how the premium lock really breaks hidden cost mechanics. Let's pull back the curtain. Most people think guaranteed means the price can't change. In these policies, it often means something else. The company guarantees you can keep the policy if you pay whatever the new premium becomes. That's a very different promise. Here's where most people get tripped up. Teaser rates. You start with a low monthly payment that looks great in year one. After a set period, often 5 to 10 years, the policy recalculates or re-rates based on your current age band. The result is a jump just as other costs rise. The policy didn't break a promise. The promise was never for a fixed premium for life. Age banding and stepped premiums. If you see age-stepped, age-rated, or annually renewable, that means your price is tied to your age, so it steps up at regular intervals. You're not doing anything wrong. Time alone pushes the premium up. The sales line locked in at your current age can be technically true for the first band. Then the staircase starts. Graded benefits and waiting periods. Many guaranteed issue or simplified policies pay a reduced benefit in the first 2 years. If death occurs during that period, the payout might be premiums paid plus interest, not the full face amount. If you missed that clause, you expected a higher benefit than the contract delivers early on. That's not an accident. It's how risk is priced without full underwriting. Policy fees and modal factors. The base premium is one number. The bill you pay monthly can be higher because of policy fees and modal charges for paying monthly instead of annually. Switching from annual to monthly can add 5 to 10% to your real cost. That's $25 to $50 extra per year on a $50 monthly payment. If you ever switched payment modes to fit your budget, you may have quietly inflated your real cost. Renewable language. Look for renewable to age 80 or renewable at increasing. Premiums. That's not a fixed price guarantee. It means you can keep coverage by paying the new, higher price at each renewal period. Past a certain age, those jumps get big fast. Missed payments and loan balances. With some permanent policies, if you borrow against the cash value or miss a payment, fees or loan interest can erode value and trigger a policy lapse. In simpler final expense policies, a missed payment can terminate coverage and reset waiting periods if reinstated. Either way, the risk is you pay for years and end up with no benefit. Let's anchor this with a simple example. Say someone buys a policy at 65 for $40 a month. It feels manageable. By the mid-70s, the premium has stepped up multiple times, now $85 to $120 depending on structure. Meanwhile, health costs rose, income tightened, and one missed payment creates a scramble. Many people lapse right here. The policy pays nothing. The family still faces the funeral bill. That's the worst-case scenario we're trying to avoid. Common traps you can spot in writing, terms like stepped, age-rated, renewable, or increasing premium signal price changes. Graded or modified benefits mean reduced payouts early on. Policy expenses, administrative fees, and modal factors can inflate monthly cost. Contestability period means potential review delays on claims within the first 2 years. A quick win you can do today. Call the carrier and ask for the premium schedule and guaranteed statements in writing. Say, is my premium guaranteed level for life? Yes or no? Please send the page that shows it. Then ask, is my death benefit level and immediate from day one? Yes or no? Show me the page. If they dodge or only say guaranteed renewable, that's your clue the price can rise. One more subtlety. Some ads compare fixed pricing versus stepped premiums, as if fixed solves everything. Fixed pricing can be good, but only if the contract is truly guaranteed level for life with a level death benefit and no surprise fees. Don't rely on a headline. Verify the clause. Why this matters. Rising premiums create a slow squeeze that ends in a lapse. A lapse erases everything you've paid. And it usually happens when your family needs the money most. If you master the language and get the guarantees in writing, You avoid paying for a benefit you never receive. Once you see how the lock breaks, you'll be ready to use the question that exposes any policy and move to tools that put you back in control. Mini cliffhanger: the question that exposes any policy. Grab your phone and ask this word for word. Is my premium guaranteed level for life? Yes or no? And will you send me the exact page that states it? Then ask, is my death benefit immediate and level from day one? Yes or no? And please email me the policy page that shows it. Pause. Wait for a direct answer. If they say guaranteed renewable, that means the price can rise. If they say graded benefit, that means reduced payout in the first years. Next, tighten the net. Are there any age bands, stepped increases, or modal fees for monthly payments? Please include the scheduled premium table. Follow with, are there waiting periods, exclusions, or riders that can reduce or delay the benefit? Show me where it's written. If they won't send screenshots or a PDF, that's your signal. Here's the payoff. A clear yes or no in writing lets you decide without guesswork. If they dodge, you've got your answer. The policy isn't truly locked. That's when you pivot to a plan with zero surprise bills, cash you control, accessible to your family fast, and no lapse risk. That's pillar one, and it's the simplest when you can set up in under 30 minutes. The simple, liquid plan, high-yield savings. Why this works first. You need money your family can reach quickly without underwriting, claim reviews, or waiting periods. A dedicated high-yield savings account labeled Funeral Fund gives you control, principal safety, and predictable growth. The account is boring on purpose. That's the point. Funds are there when needed, regardless of market dips, and you decide the monthly transfer, so it fits your budget now and later. What to set up? Open a separate high-yield savings account at a bank or credit union you trust. Give it a clear nickname like Funeral Fund so you never mix it with your spending money. Add a payable on death beneficiary. Banks and mainstream sources explain that POD lets your beneficiary access funds directly after you pass, with ID and a death certificate, bypassing probate. Ask the bank for the beneficiary form while you're opening the account, or add it in online banking if they allow. How to automate it? Pick a number that doesn't pinch $25, $50, or $100 a month, and set an automatic transfer from your checking on the same day you receive income. Consistency beats intensity. Increase contributions when you get a cost of living bump or when another bill ends. If you're nervous about starting, commit to 3 months. At a small amount, momentum makes this easy. Setting the right target. Don't guess. Call 2 local funeral homes and request the general price list. For now, use a provisional target. Direct cremation, cremation with a service, basic burial, or traditional burial with viewing. National medians suggest direct cremation around $1,700 to $2,200, cremation with a service around $6,280, and traditional burial around $8,300. We'll tighten this with your local quotes. Then you'll update your goal in the account notes. Access rules your kids will thank you for. Add 1 primary POD beneficiary, and if your bank allows, a contingent beneficiary. Tell both where the account is and what it's for. Write a 1-page final wishes note with the provider you prefer, service type, budget, and who to call first. Put a paper copy with your other documents and an electronic copy in a shared folder. Access plus clarity removes guesswork. Common mistakes to avoid. No POD designation. If you skip it, funds may get stuck in probate. Fix this today with the bank's form. Mixing funds. Keep this account separate so you never borrow from it. If you need emergency money, build a separate emergency fund. Chasing teaser rates. Some banks offer a high APY that drops in a few months. A solid, consistent rate is better than hopping banks and forgetting your POD. Ignoring local costs. Overfunding ties up cash you might need. Underfunding forces last-minute debt. Confirm costs and set a realistic target. How to verify pod is active. After you submit the form, ask for confirmation in writing, an updated account profile, or a letter that lists the beneficiary. Some banks even show beneficiaries in online banking. If they don't, save a photo or PDF of the signed form. Share a copy with your executor or the two people who will handle your affairs. A quick example. Let's say you set $50 per month. In year one, you'll have $600 plus interest. In 5 years, you're at $3,000 plus, and if rates stay decent, it grows quietly in the background. Pair that with a small-term policy for a limited window, and you've covered the full target from day one while your cash balance climbs. When your fund hits the number you want, you can reduce or drop term. That's leverage without locking yourself into rising premiums. The thing most people miss is immediate usability. Claims can take time, especially inside a contestability period or if documents are incomplete. A pod savings account can be accessed as soon as the bank sees the death certificate and proper ID. That speed reduces stress for your family during the busiest week they'll face. What to do if you already have some savings? Don't move everything. Transfer the amount you want earmarked for final costs into the funeral fund. Then add the pod. Labeling matters. Your kids won't have to guess which dollars they're allowed to use. If you're concerned about bank insurance limits, stay within FDIC or NCUA caps per depositor per bank, or diversify across institutions. Simple checklist you can finish today. Open a dedicated high-yield savings account named Funeral Fund. Add a pod beneficiary, and, if possible, a contingent. Set an automatic monthly transfer for an amount that fits. Write a one-page final wishes note and store it with copies of your account confirmation. Tell 2 family members where the folder is and who to call first. Now, you might be thinking, what if I pass before the fund reaches the full amount? That's where layering comes in. In the next pillar, we'll cover a small level term policy to bridge the gap while your fund grows. But even if you skip term, having a few thousand ready beats forcing your kids to float everything on a credit card. If you remember nothing else about Pillar 2, remember this: control, clarity, and quick access. You're not asking permission, you're not hoping a claim clears in time, and you're not gambling on premiums that rise with your age. You're building a straightforward solution your family can use within hours. Cost reality check. What funerals actually cost, regional ranges. Now let's nail the target before you shop for any financial product. You don't need guesses. You need your local costs. National medians from industry sources put a funeral with viewing and burial around $8,300 and a funeral with cremation around $6,280. But prices swing a lot by region, provider, and what's included. Your job is to find your local number and write it down. Here's why this matters. If you overestimate, you tie up cash you could use. If you underestimate, your kids pull out a credit card the week of the service. Getting the number right lets you size your funeral fund and any term policy with confidence, and it keeps you from buying fluff you never wanted. What to compare? Fast and fair. There are 4 common tiers. Direct cremation, no ceremony, minimal services, typically $1,700 to $2,200. Cremation with a service, ceremony plus cremation, $5,500 to $7,000. Basic burial, graveside, or simple service with burial, $6,000 to $8,000. And traditional funeral with viewing and burial, fully staffed, $8,000 to $12,000 plus. Call 2 local funeral homes and ask for the general price list. They're required to provide it upon request. Say, I'm planning ahead. Please email me your general price list and any package descriptions. You'll see line items for basic services, removal/transport, preparation, use of facilities, vehicles, merchandise like caskets or urns, and cash advances such as death certificates or clergy honoraria. Now, the thing most people miss: packages versus line items. Packages can look cheaper, but they sometimes bundle services you don't want and hide markups in the merchandise. Ask for both the package price and the itemized equivalent. If the line item total is lower without something you don't need, you just saved money without losing quality. Casket and urn markups are a classic trap. Funeral homes can mark up merchandise, sometimes substantially. You're allowed to provide your own casket or urn from another vendor. If you like a package but not the casket price, ask how the package adjusts if you bring your own. If the answer is a vague, we'll work with you. Press for the exact dollar change. Set your target with a simple rule. Pick your preferred option, then add a buffer of 10 to 15% for cash advances and small variables. If your traditional burial quote comes back around $8,300, set your funeral fund target at $9,000 to $9,500. If you're aiming for direct cremation and you see pricing around $1,900 in your area, set the target around $2,100 to $2,300. You're not trying to be perfect, you're giving your family breathing room. Your quick win today: make 2 calls, request 2 price lists, and choose your preferred option. Write your target number on your final wishes note and in your funeral fund account memo. Once you see your local reality, every financial decision after this becomes simple. The smart, low-cost bridge: term life. Now, let's talk about leverage. If you're reasonably healthy, level term life can cover the full target today for surprisingly little while your funeral fund grows in the background. The reason it's a smart bridge is simple. You get more coverage per dollar for a fixed period. Then you shut it off when you don't need it. No forever premiums, no sneaky age steps during the term, and no lapse risk from rising costs if you buy the right kind. Why this matters? The danger window is the next 10 to 20 years for most people, exactly when you want the certainty that your kids won't face a bill if you pass tomorrow. Term is built for that window. You can size it to your local funeral cost, plus a buffer for cash advances, travel, or a small debt. If your town's traditional burial runs around $8,300 to $9,000, a $15,000 to $25,000 term policy is often plenty. If you prefer a simpler cremation with a service, $10,000 to $15,000 may do the job. What to shop for? The 2 phrases you need are fixed pricing and fixed death benefit for the entire term. That means the price you pay is locked for, say, 10 or 15 years, and the payout doesn't shrink. You want a policy that's truly level, not annually renewable term, that reprices each year. You also want the term length to match your bridge plan. If you think you'll fully fund your funeral fund in 10 years, buy a 10-year level term. If you want more cushion, choose 15. How to compare carriers. Get at least 3 quotes from reputable companies, ideally through an independent broker who can shop the market. Ask each one to send you an outline of coverage that states fixed pricing and fixed death benefit and shows the term length in plain English. If someone pitches a no-exam policy, that can be fine, but verify whether the benefit is immediate or graded and confirm that the premium is locked for the full term. A quick health questionnaire or a brief exam can drop your price a lot if you're generally healthy. Underwriting and health. Basic underwriting works in your favor if you have manageable conditions and see a doctor. No exam options exist, but they often charge more for the convenience, so you're trading speed for cost. If your health is a hurdle, that's okay. Remember, your funeral fund and pre-need options don't rely on strict underwriting. Term is the if healthy, get more for less tool. Right-sizing the amount. Start with your target from the price lists you gathered. Add a 10 to 20% buffer for cash advances and small surprises. if your local cremation with a service comes to about $6,280, a $10,000 term can cover that with room to spare. If your regional burial lands near $8,300 and you want to add travel help for out-of-town family, choose $15,000 or $20,000. You're not trying to replace income. You're covering a single predictable expense with a little breathing room. Common mistakes to avoid. Buying a term that's too long. A 30-year term costs more and outlasts the need. Stick to the years you actually care about. Buying a term that's too short. If you know you won't hit your savings target in 5 years, don't buy a 5-year term. Go 10 or 15, so you don't face a reprice. Missing the payment method detail. Set up autopay. A missed payment can cause a lapse. Keep a backup funding source on file. Assuming no exam equals no waiting period. Some simplified policies still have graded periods. Read the page that states benefit is level and immediate. How to implement this cleanly. Step 1. Use your target to select the coverage amount. Step 2. Decide the term that matches the time you'll need the bridge. Step 3. Collect 3 quotes. Step 4. Request written confirmation of fixed pricing/fixed benefit and the policy form number. Step 5. If you're approved, put the policy in your safeguard stack and tell 2 family members where it is. Step 6. Set a calendar reminder 60 days before the term ends and another reminder 2 years before the term end to review your funeral fund balance and decide if you'll reduce or drop coverage early. A quick example to make it real. You set a $15,000 term for 10 years and pay a modest monthly premium that fits your budget. Your funeral fund auto-transfers $50 a month. In 5 years, you've banked a few thousand, and in 10 years, you're close to or at your target. You cancel the term with 0 penalty and keep your cash. You used the policy like scaffolding, helpful while you built, unnecessary once the structure stands. If you remember nothing else about term, it's a tool, not a forever commitment. Size it to the job, lock the price and payout for the full term in writing, and drop it once your savings cover the goal. That's how you get maximum protection per dollar without paying for decades. The agent's least favorite question. Here's the question that makes agents squirm. Is this premium fixed for the entire term? Guaranteed. And is the death benefit fixed? An immediate yes or no? Please show me the exact page. Then hit the follow-up, what's the conversion option and deadline? Point me to the policy page. If they hand wave, you haven't got clarity. Push one more time. Are there any renewal jumps at the end of the term? And if so, what's the exact renewal premium in year 11 or 16? Seeing that number in writing keeps you from getting trapped by a surprise reprice later. Ask about riders in plain English. Is accidental death extra? Is there a waiting period? Any exclusions I should know now? You're not being difficult, you're being precise. Most agents will dodge this question. They'll say it's complicated, or let me get back to you. If they do, you've got your answer. The policy isn't truly locked. And that's your signal to move to Pillar 4. The payoff is next. We'll move to Pillar 3, where we fix price creep where it starts at the funeral home by locking in itemized costs directly. This is the step many agents never mention, and it can save you thousands when done right. The direct, guaranteed price lock pre-need funeral plans. This is how you stop price creep at the source. A pre-need plan is an agreement with a funeral home that itemizes services and merchandise and, when guaranteed, locks those specific line items at today's prices. Unlike insurance that pays cash later, this contracts the goods and services you choose now. Many plans are funded by a trust or an insurance policy behind the scenes, but your focus is the contract, what's guaranteed, what's not, and how portable it is if you move. Why this matters? Inflation doesn't stop for caskets, vehicles, or staff time. A guaranteed, Itemized pre-need plan means the funeral home absorbs those future price increases for the covered items. That reduces guesswork and protects your family from upsells under stress. The benefit your kids feel isn't just money, it's confidence that they're doing exactly what you wanted at the price you agreed. What to set up? Ask 2 funeral homes for. 1, their general price list. 2, their pre-need contract with guaranteed items clearly marked. 3, written rules on portability and refunds. And 4, a list of non-guaranteed cash advances like death certificates, obituaries, or clergy honoraria. You want a document that shows each service, each piece of merchandise, and a guaranteed check mark where applicable. If a provider won't itemize, that's your signal to keep shopping. You're right, I apologize. The response got cut off. Let me continue from where it stopped. How funding works in plain English. You'll either pay a lump sum or installments. The funeral home typically places the money into a regulated trust or an insurance-funded pre-need policy. You don't have to manage that part. Your job is verifying that your contract states the guarantee on services and merchandise you selected. Payments stop when the plan is paid. If you choose installments, confirm what happens if you died before completion. Many plans are designed so the insurance component covers the shortfall, but get that clause in writing. Portability and relocation. Life happens. Ask, if I move, can this plan be transferred to another funeral home? Is there a fee? Does the guarantee travel or convert to a dollar credit? Some large providers advertise relocation protection and flexibility. Independent homes may offer transfer options too. Read the exact portability language so your kids aren't stuck or penalized later. Refund rules and flexibility. Request the refund policy in dollars, not vague phrases. Ask, if I cancel in 2 years, how much do I get back and how quickly? Also ask, can I change items later without losing guarantees on the rest? The best contracts let you adjust within reason and keep guarantees on the unchanged line items. The big gotchas to avoid: vague packages with no itemized guarantees. If it isn't itemized, it isn't controlled. Non-guaranteed merchandise hidden in fine print. If the casket or urn isn't guaranteed, price inflation can erase the point of prepaying. No portability or unclear transfer terms. Moving shouldn't blow up your plan. Cash advances treated like guaranteed items. They usually aren't. Budget a small savings buffer for these. Verification script you can use tomorrow. Please show me an itemized pre-need contract where guaranteed services and merchandise are clearly labeled. Confirm in writing which items are guaranteed, which are not, how portability works if I move, and your exact refund schedule. Also confirm how the plan is funded, trust or insurance, and whether my selections are guaranteed regardless of future price increases. Ask for PDFs and highlight the guarantee language. What's guaranteed versus not? Typically guaranteed. Basic services of the funeral director and staff, use of facilities, removal/transport within stated miles, preparation, and specific merchandise you select now. Typically not guaranteed. Third-party cash advances like certified copies, obituary fees, flowers, and clergy. That's why I like stacking a small savings buffer alongside the plan for those variables. Real-world flow. When death occurs, your family calls the funeral home listed on your final wishes note. The provider pulls your pre-need file, delivers the guaranteed services and merchandise at no additional cost for those items, and bills only the non-guaranteed cash advances. If the plan is portable and you've moved, they transfer or apply the credit per contract. That single call avoids shopping during grief and blocks surprise price jumps on the core costs. Common mistakes and fixes: buying everything up front, just in case. Only lock what you know you want. Keep flexibility for ceremony details. Not telling your family. Put the contract in your safeguard stack and give 2 people the provider's name and your contract number. Assuming guaranteed means everything. It rarely does. Highlight guaranteed lines on your copy and note non-guaranteed items with a dollar cushion. Quick when you can finish this week. Request 2 itemized guaranteed pre-need proposals in writing. Circle guaranteed items and cross-check against your wishes. Confirm portability and refund rules in the contract, not a brochure. Add the provider's contact to your final wishes note and share it. One more nuance. Pre-need locks prices, but funds sitting with a provider don't earn you market returns. That's not good or bad. It's a trade for price certainty and simplicity. If you value control and access, keep more in savings and lock fewer items. If you value certainty and want your kids to make one call, lock the core services and merchandise you care about most, choose the mix that fits your budget and your peace of mind. Safeguard Stack, paperwork that makes it easy for your kids. Now that you've picked your tools, let's make them usable. Paperwork is where good plans fail or shine. Your goal is simple. One folder, clear instructions, instant access. Start with access, not theory. Make sure every money source your family might use has a named beneficiary or payable on death designation. That includes your funeral fund, checking, savings, and any life insurance. The reason is speed. Beneficiaries and pods bypass probate. So your kids aren't waiting weeks while bills are due. After you add them, get written confirmation, an updated profile, a letter, or a screenshot, and put copies in your folder. Next, centralize documents. Print and place in one clearly labeled folder and store a digital copy in a shared drive with view access for 2 people you trust. Include funeral fund account info and the pod confirmation. Any term life policy, the policy packet, the coverage page, and the customer service number. Pre-need contract, the itemized guarantee, portability rules, and contact info. Photo IDs, front and back copies of your driver's license or state ID and your Medicare card, because providers often ask for them. A short list of passwords, or better, instructions for your password manager with an emergency access contact. Now, write a 1-page final wishes note. Keep it plain. Preferred provider, service type, direct cremation, graveside or traditional, budget number, and 2 names to call first. One must have access to the folder. Add practical choices that reduce friction. Faith preferences, music or readings you care about, burial or scattering location, and any please don't spend on this items. The point is to reduce decisions, not script every detail. Date it and sign it so they know it's the latest version. Here's the step most people skip. Tell 2 people where the folder is and what it's for. Set a 15-minute call this week. Say, if something happens, open the final folder in the hall cabinet and the shared drive. The money is in the funeral fund. The policy and contract are inside. Call this provider first. That conversation saves your family hours when it counts. If someone will handle decisions for you, add the right authority. A durable power of attorney can help with financial access while you're alive if you're incapacitated. A healthcare proxy handles medical choices. Your executor manages the estate after death. These roles are different. If you already have documents, put copies in the folder and note where the originals live. If you don't, schedule a quick consult with an attorney or reputable legal service and keep it simple. Watch for common tripwires, mismatch between your will and your pod designations. Beneficiary designations usually win. Make sure they align. Single point of failure storage. Don't keep the only copy in a locked safe nobody can open. Either share the code or use a fireproof folder and a shared digital backup. Outdated contacts. If your beneficiary or executor changes, update forms, and your note immediately. Cross out and reprint isn't enough. File a new form with the bank or insurer. Create a 1-page checklist your family can follow in order. Top to bottom. Locate folder and shared drive. Call provider. Retrieve funds from the funeral fund using the death certificate and ID. Contact insurer if applicable. Follow the final wishes note. Handle cash advances with the savings buffer. Put phone numbers and policy or contract numbers right on that page. Make maintenance painless. Set an annual 30-minute date on your calendar, same week every year. In that checkup, glance at balances, confirm beneficiaries, scan the pre-need and policy pages, and reprint your final wishes if anything changed. Small tweaks now prevent big confusion later. Quick when you can finish today. Name or verify beneficiaries/pod on all relevant accounts. Build the folder with copies of every key document. Write your one-page final wishes and checklist. Share folder location with 2 people and put a short reminder on your phone to review annually. Clarity plus access beats complexity every time. With this stack, your kids won't search, argue, or guess. They'll follow a page, make 2 calls, and get it done. The $50,000 math, your personal opportunity cost. Let's make this real with your numbers so the decision clicks. You don't need a finance degree, just a couple of simple comparisons. Start with what you're paying now. Pull last month's premium on any final expense or burial policy. Write that number down. Then ask, if I paid this for 10, 15, or 20 years, what's the total out of pocket? Multiply it out. If it's $45 a month, that's $540 a year. Over 15 years, that's $8,100. Over 20 years, it's $10,800. And that's before any increases if your premium steps up with age. Now compare that to a boring, steady plan you control. Same $45 a month into a high-yield savings account or a conservative vehicle. Use a savings calculator with a 4 to 6% assumption to see the range. At 5% with monthly contributions over 20 years, those steady deposits can grow into a solid fund. The exact result depends on your rate and discipline, but the direction is consistent. Contributions plus time builds a balance you can use immediately without lapses, waiting, periods, or claim reviews. Here's a quick pattern you can test in any calculator. Contribution, $40 to $60 monthly time, 15 to 20 years rate assumption, 4 to 6% conservative planning range. Output, end balance and total contributions. 2 things jump out. First, the end balance is usually far larger than the raw contributions because of compounding. Second, if your insurance premium isn't truly locked, your real cost might creep higher than you planned, while your savings transfer stays under your control and can be paused or increased as life changes. Now layer in a term bridge. Let's say you chose a $15,000 level term policy for 10 years while you build your funeral fund at $50 a month. The term gives your family full coverage today, and your savings grows in the background. At year 5, your cash balance handles most cash advances and extras. By year 10, you've built close to your target. You cancel the term and keep your cash. You paid for a job, not for life. Where does the $50,000 frame come from? Think of it as a swing over time, not a single check. Add up premiums you don't pay for decades on a policy that might rise or lapse. The growth you capture by keeping contributions working in your name, upsells you avoid by locking in actual service prices, or pre-shopping costs, late life squeezes you dodge that often trigger lapses, and zero payouts across a long retirement. Avoiding rising, non-guaranteed premiums while compounding steady contributions can add up to tens of thousands in preserved retirement dollars. Your exact number depends on your age, rate, and time, but the swing is real. The goal isn't to hit an exact dollar. It's to choose the path that leaves you with more control and less waste. Let's run a simple choose your path drill. Path A, keep paying a policy with unclear premium guarantees. Your total cost rises over time. Risk, a lapse in your 70s or 80s erases everything. Path B, Switch to a level term bridge size to your real target, plus a funeral fund auto transfer. After the bridge, you stop premiums and keep the cash. Path C. Lock core services directly with an itemized pre-need guarantee. Then keep a small savings buffer for cash advances. Minimal surprises. One phone call for your kids. Which path protects your kids and keeps your retirement intact? That's your checkpoint question. If your current policy fails the fixed pricing/fixed benefit in writing test, the math usually favors B or C, or a mix, a small term bridge plus a targeted pre-need backed by a pod savings buffer. Your quick win. Plug your monthly premium and a small savings transfer into a calculator at 4 to 6% for 10 to 20 years. Then write one action you'll take in the next 24 hours. Open the funeral fund, request 3 level term quotes, or ask 2 funeral homes for itemized, guaranteed pre-need proposals. Pick one. Start it. If you already own final expense, keep, freeze, or cancel. If you already pay for a final expense policy, don't yank the cord. You need a clean, safe transition, so your family isn't exposed mid-switch. The goal is simple. Verify the promises in writing, choose keep, freeze, or cancel, and sequence your steps so there's never a coverage gap. Start with verification, not opinions. Grab your policy and call the carrier. Ask for 2 pages by email. One that states whether the premium is guaranteed level for life, and one that states whether the death benefit is level and immediate from day one. If they say guaranteed renewable, that means price hikes. If they say graded benefit, that means reduced payout early. Also request the premium schedule, any age bands, and the page listing policy fees and modal charges. While you're at it, ask if there's any cash value or surrender value and how to request it. Now use a simple decision tree. Keep it if 3 things are true. 1, the premium is guaranteed level for life in writing. 2, the death benefit is level and immediate. And 3, the monthly cost comfortably fits your budget, even if your income drops later. If those boxes are checked, you can keep it, but still do a budget test. Ask, if my expenses rise 10% and my income falls 10%, can I still pay this easily? If yes, keep and move on with your safeguard stack. Add the policy, the customer service number, and a note about where premiums pull from. Freeze it if it's marginal but not predatory. By freeze, I mean stop any optional riders that add cost, switch to the least expensive billing mode you can manage, and lock in a payment method that won't bounce. If the policy has a small cash value, don't borrow against it unless it's part of a planned exit. Loans and missed payments can trigger lapses. While frozen, build your funeral fund and, if needed, add a small level term bridge. Revisit in 6 months with fresh numbers. If rising premiums or fees squeeze your budget, you're trending toward cancel. Cancel it if the structure fails the test. Red flags, stepped or age-rated premiums, graded benefits you didn't want, renewal jumps at older ages, or a premium that already stresses your budget. But sequence matters. Before canceling, put your replacement plan in place. That might be opening your funeral fund with a pod, adding a level term bridge, or signing an itemized, guaranteed pre-need contract. Only when your replacement is active do you call to terminate the old policy. Here's the safe sequence to avoid a coverage gap. Build your replacement, open the funeral fund, add pod, set the transfer, or secure your level term approval, or get your pre-need contract signed with guarantees in writing. Confirm replacement is active. Funds transferred, policy in force, or contract countersigned. Notify family. Update your folder and final wishes note so they know which plan to use. Then cancel the old policy. Request written confirmation of the cancellation date and any refund or cash value. A few tax and paperwork notes. Surrender values from whole life can be taxable if they exceed your basis. Ask the carrier for a year-to-date statement and a 1099 illustration. So you know if there's a taxable portion, if there's a small cash value that's clearly yours directed into your funeral fund, so it's usable. Don't name the funeral home as beneficiary of your policy or your bank account. Consumer advocates warn against it. Keep beneficiaries aligned with your will and your final wishes note. Common mistakes to avoid: canceling before your replacement is active. That's how families get stuck. Reinstating after a lapse without reading the reset terms. Reinstatement can restart waiting periods. Switching payment modes without checking modal fees. Monthly can cost more. Annual is cheaper, but only if it's easy for you. Ignoring conversion windows on term. If your current policy happens to be convertible and you're considering permanent coverage for another purpose, note the deadline now. Quick 15-minute call script you can use today. Please email me the page that states whether my premium is guaranteed level for life and the page that states whether my death benefit is level and immediate. Send the premium schedule, any age bands, and the list of fees. Also, what is my current cash value or surrender value, and how do I request it? If the answers aren't crisp, that's a signal to prepare your replacement. Here's a fast example. Maria, 72, pays $58 a month. The carrier admits the premium steps at $75 and $80, and the benefit was graded in the first 2 years. She opens a funeral fund, adds a pod, sets $50 a month. She gets a $15,000 level term for 10 years because she's healthy enough, locks fixed pricing/fixed benefit in writing, and files the policy in her folder. Once the term is in force and her savings transfers run, she cancels the old policy and moves a small surrender value into her funeral fund. Net result: more coverage today, a growing cash buffer, and no rising premium risk. If nothing else, remember this sequence: verify, decide, replace, then cancel. That order protects your kids and your retirement at the same time. Common mistakes and how to avoid them. Top 6. Let's clean up the errors that quietly drain budgets and create chaos for families. Mistake 1. Buying more than your real cost. Overbuying coverage feels safe, but it ties up cash you'll need for living. The fix: size everything to your local number. You already pulled 2 price lists. Pick your preferred option, add 10 to 15% for cash advances, and set your funeral fund and any term policy to that target, not someone's brochure number. Mistake 2. No beneficiary or pod on accounts. Without it, funds can get stuck in probate when your family needs money fast. The fix: file the bank's pod form and keep a copy in your folder. Confirm in writing the beneficiary shows on the account. Do the same for any life insurance. Mistake 3. Letting premiums creep beyond your budget. This is how lapses happen in the 70s and 80s, exactly when coverage matters most. The fix: if premiums aren't guaranteed level in writing, you need a replacement path. Either switch to a level term bridge and build your funeral fund, or lock core services with a guaranteed pre-need and keep a savings buffer for cash advances. Mistake 4. Misunderstanding level. Many people hear level and assume lifetime. Some policies are level for a period, then spike. The fix: get the page that says level premium for life or level premium for X years. If it's a term policy, confirm fixed pricing and fixed benefit for the entire term. Mistake 5. Canceling before replacing. That gap is where families get stuck with a bill. The fix: verify, decide, replace, then cancel. That order is non-negotiable. Mistake 6. No annual date to make sure it all still fits. The fix: put a repeating calendar reminder, same month every year, to review balances, beneficiaries, and documents. Done in 30 minutes. One quick win: book that annual 30-minute review now. Name it Final Wishes Check. Include a short checklist in the calendar invite. Balance, beneficiaries, contracts, term reminders. Future, you will thank present you. 24-hour action plan. Protect your kids without draining retirement. Let's turn this into action you can finish by tomorrow. You don't need a full overhaul, just 5 moves that lock in clarity and access. Step 1, open your funeral fund. Go to your bank or a reputable online bank and open a high-yield savings account with the nickname Funeral Fund. While you're there, add a payable on death beneficiary, and if they allow, a contingent. Ask for written confirmation or a screenshot showing the beneficiary on file. Set an automatic transfer for an amount that fits $25, $50, or $100 a month. Schedule it for the day you receive income. This seeds your solution today and builds momentum. Step 2, get 3 level term quotes sized to your target. Use the numbers you gathered from local funeral homes. Add a 10 to 20% buffer and pick a term that matches your timeline, 10 or 15 years for most people. When you request quotes, ask for fixed pricing and fixed benefit for the entire term in writing and the policy form number. If your health is decent, consider a brief exam to reduce cost. If you prefer no exam, verify there's no graded benefit and that the premium is locked for the full term. Step 3, request 2 pre-need proposals and guarantee language. Call or email 2 funeral homes and ask for an itemized, guaranteed pre-need plan. Say, please mark which services and merchandise are guaranteed, list cash advances that are not, send portability rules if I move, and include the refund schedule. Ask for PDFs. You're not committing yet. You're collecting options that fix price creep at the source. Step 4, write your 1-page final wishes note and build the folder. Include your preferred provider, service type, budget number, and 2 first calls. Add copies of your funeral fund confirmation, any term quote printouts or approvals, and any pre-need proposals. If you already have a policy or contract, include those pages. Put the folder in an easy-to-find spot and upload a digital copy to a shared drive. Step 5, book a 15-minute family call. Keep it simple. If something happens, open the final folder in the hall cabinet and the shared drive. The funeral fund has money with a pod. Here's the bank. If I have term, the policy is inside with the number. If there's a pre-need, call this funeral home. You're not debating. You're orienting them so they can act without stress. Optional booster steps. If you have another 15 minutes, put a reminder on your calendar for a yearly review and another 60 days before any term ends. If you already own final expense, make the verification call for the fixed/fixed pages and fee schedule and drop those into the folder. Add a brief note about please don't spend on this items, helpful guardrails for your kids. What this gives you by tomorrow: a dedicated beneficiary-enabled savings account that your family can access fast, real prices from local providers, a term bridge option you can approve or skip, and a clear 1-page plan your kids can follow. No guessing, no scrambling, no draining your retirement with rising, unclear premiums. If you want the easiest on-ramp, do steps 1 and 4 today. Open the funeral fund, add the pod, set the transfer, and write the 1-page note. Those 2 alone cut 80% of the stress your family would face in the first week. Then layer step 2 or 3 based on your health and preferences. You're not trying to build the perfect plan in one sitting. You're installing a system that works on its own. A small monthly transfer, a fixed price option if you choose it, and a page your kids can act on. Start now, keep it boring, and give your family the gift of clarity. Quick wins from viewers like you. 3 quick wins from people just like you who took simple steps and got relief. Story 1, Daniel, 69, from Ohio. He'd been paying $42 a month on a policy he bought over the phone. He called the carrier using the script you heard earlier and learned the premium would jump at $75 and again at $80. He opened a funeral fund, added a pod, and started $50 monthly transfers. Then he requested 2 pre-need proposals, chose a guaranteed plan for core services, and left cash advances out. He canceled the old policy only after the pre-need was signed and his savings transfer ran for 2 months. 2 months later, his daughter told me, "I'm not worried anymore. We know who to call, what it costs, and where the money is." The fix wasn't fancy. Separate account, written guarantees, 1 folder. Story 2. Alicia, 63, Arizona. Healthy, on a budget. She wanted to avoid whole life pitches that didn't fit. She pulled 2 local price lists. Cremation with a service around $6,280. She picked a $10,000 10-year level term policy and got fixed pricing/fixed benefit. In writing, she set a $75 monthly transfer into her funeral fund. For years in, her fund covered half the target. Her term still gave full protection. When she hit year 7, her fund reached her number plus a buffer. She canceled term 3 years early. Result: years of maximum coverage at minimal cost. And she kept her cash. Story 3. Jorge and May, 72 and 70, Washington. Health issues made underwriting tough. They skipped term and focused on control. They opened a funeral fund with pod beneficiaries to both adult kids, set $100 monthly transfers, and asked 2 funeral homes for itemized pre-need plans. They chose one with clear guarantees on services and merchandise, confirmed portability, and wrote a 1-page final wishes note with the contract number. When Jorge passed 18 months later, his son accessed the funeral fund with the bank's pod process and paid cash advances within days. The funeral home honored the guaranteed items, and the folder cut the work to hours, not weeks. What clicked for these 3? They verified promises in writing, kept the money accessible, and sized everything to reality, not fear. None of them chased complicated products. They used a simple mix: savings for speed, term for leverage when health allowed, and pre-need to lock prices they actually wanted. Their families didn't scramble. They followed a page. Lightning Q&A, fast clarifications. What if I have health issues? You still have 2 strong tools: the funeral fund with a pod and a clearly itemized pre-need plan that guarantees services and merchandise you choose. If you compare guaranteed issue insurance, read the graded benefit page carefully and confirm affordability long term. What if I move states? For savings, nothing changes. Your pod account follows you. For pre-need, portability language matters. Ask in writing if the plan transfers to another home, whether the guarantee travels or converts to a dollar credit, and if any fees apply. If you expect to move, choose providers that offer documented relocation flexibility. What if markets drop? Your funeral fund is in a bank account, not the market, so principal stays intact. Term premiums don't change during the guaranteed term. Pre-need guarantees apply to listed services and merchandise regardless of market dips. You're combining principal safety, fixed premiums for a period, and contractual guarantees. Do I need all 3, savings, term, and pre-need? No. Pick the mix that fits your health, budget, and preference for control versus certainty. Many people do savings plus term as a bridge. Others do savings plus a targeted pre-need for core services. If underwriting is easy and cost is low, term can be a smart add. If you prefer fixed pricing and 1 call for your kids, pre-need covers that. Just keep a small savings buffer for cash advances. How big should the buffer be if I choose pre-need? After you review cash advances on the price lists, add 10 to 15% of your expected total in your funeral fund. That usually covers certificates, obituary fees, and small variables. What if my bank doesn't show the pod online? Ask for written confirmation, a letter, updated account profile, or a copy of the signed form. Keep it in your folder and share a copy with your executor and the 2 family members you named in your final wishes note. Isn't final expense insurance simpler? It can be, but simplicity without clarity can get expensive. If premiums step up with age or benefits are graded and you weren't expecting that, the plan can fail when it matters. If you keep a policy, get the fixed/fixed pages in writing and pressure test the premium against your future budget. What if I pass before my funeral fund is fully funded and I don't want term? Even a few $1,000s accessible via pod lowers stress dramatically. Your kids can cover cash advances and basics fast while the estate processes. If term isn't a fit, use the pre-need to fix known costs and the funeral fund for the rest. Here's the takeaway. You don't need rising, unclear funeral insurance that might never pay out. Instead, use a pod savings fund, a right-size level term bridge, or an itemized pre-need to protect your kids without bleeding your retirement. Funeral costs are rising 4 to 5% annually. The longer you wait, the higher your target becomes. Pick one move from the 24-hour plan. Open the funeral fund, get 3 level term quotes, or request 2 pre-need proposals, and start it today. Your family's peace of mind depends on it. Don't stop here. In the next video, we're breaking down how to cut your monthly insurance costs by up to 40% while keeping full protection. And we'll show you the loopholes most agents hope you never find. Subscribe now so you don't miss it, and hit the notification bell so you're the first to see it when it drops.